COVID. You really can't understand the market unless you factor in the impact of COVID, and I'd say especially so if you're looking at the multifamily market. How does it impact sales value, rents, vacancy, regulations on how landlords and tenants interact, that whole thing. And what's interesting is COVID has definitely impacted the market, but maybe not in the way you think. So let's first talk about sales prices. So it's tempting, if you look at past sales prices up till today, to think that multifamily has been in a stable price trend, because you only see in sales price terms maybe a 4% price growth. But anyone who watches the news knows that we've had a global pandemic, a stay-at-home order, and landlord-tenant regulations. And that's why if you look at current listings and current activity, there's been tremendous appreciation in prices. And that's because the market has only started to catch up a little bit. Now, on the regulation front, we've seen a freeze on rent increases, on late fees, on most evictions, unless there's a threat to life and safety, with a few exceptions. The couple exceptions that some people don't factor in are if the owner decides to occupy one of the units, or if there's a sale, at which point there has to be a 60-day written notice if you're in the city of Tacoma. Now, rent has had an impact, but we've seen largely a recovery. The high point of rent in Tacoma for your average two-bedroom apartment unit was October of last year, where your two-bedroom was going for about roughly $1,600 per month. The low point of that was last March during the stay-at-home order, where it dropped pretty noticeably to about $1,350, so almost a $300 drop. As of today, it hasn't quite rebounded to $1,600, but it's pretty close, around $1,500 to $1,550. Case in point, the average Seattle two-bedroom is about $2,100, so there's still a $600 difference between the two prices. So we've seen that recovery for a variety of reasons. Some of it has just been the economy reopening, some of that has been due to stimulus checks and unemployment insurance, and a lot of it has been due to the fact that property managers, while they can't evict people, they can't issue fees, have been working with renters to come up with payment plans. And payment plans work out for both parties because the owners and the property managers get their rent money, and most renters don't want late rent, they don't want missed rent payments on their rental history, so it typically works out for both parties. One other factor that we may see affect the rental market in the future is the impact of working from home. That was obviously included for public health reasons, but the obvious appeal of not having to spend hours commuting is definitely a factor, especially when there's a $600 difference between your typical King County and Pierce County apartment. So to the extent that that remains in place once there's a COVID vaccine that's widely distributed, once the economy normalizes a little bit more, that may play a part. But in sum, if we're looking forward to 2021 and what we can expect from the multifamily market, COVID has paused the rental and the multifamily market, but it's certainly not crashed it. We're starting to see rents rebound, we're starting to see values rebound, simply because the values that drive demand have not changed. There's a stark difference between King County and Pierce County rent. Stay-at-home is making local, more affordable, comparatively speaking, markets more attractive, and there's simply no supply to meet that demand. There's a dearth of rental inventory to meet the demand, and so long as those factors remain in place, which I see them remaining in place for some time, we can continue seeing the same shortage market conditions in the multifamily market for some time. If you're ever curious about how that impacts your investment decisions or perhaps a property you own, I'm always available if you want to call, text, or email. Happy to hear from you.